Welcome to Chart Guys How to Trade. The purpose of this channel is to walk you through trading setups as we see it unfold, talk about a rationale, and provide explanations for why we would make entries, where we would place stop losses, and how you can actually apply different ideas. So let's take a look at PayPal today. This was a particularly fun one because we had a nice combination of a few different types of trade setups. We had ourselves an inside bar on the daily time frame. We had a nice breakout, a fade into a pattern, into another breakout, into clear resistance. We had some triple tops. It was a lot of fun and a lot of opportunity inside PayPal today. So let's get started. We're using the chart replay feature here on TradingView, and we're going to start on the daily time frame. So the reason we're starting on the daily time frame is because we have a nice, lovely inside bar after many days of some downside consolidation. Inside bars are bars or candlesticks that fit inside the previous range completely, and they show us a little bit of consolidation. They show us price compression, and with compression, just like a jack-in-the-box or an elastic, something eventually gives. So the idea with these types of plays is we can try to get a little inkling on the direction that these are going to break and benefit from that. The way we do that is with price action. So what we would be looking for is the bulls to break over 267.79 or the bears to break below 260.79. Now we have our daily level set. What we'll do is jump to our 1 minute time frame. This is what the chart would look like just before the bell rings. Here's our 267.79 level. What we're going to look for ultimately is a nice healthy break over that range. We want to open close to it. We want to see bull volume. We want to see bull volume take out that level and show commitment through volume. And that is exactly what we see, and this becomes our first trade of the day, a nice inside bar bull break on the daily time frame with nice momentum. So here is our opening candlestick right here. We see nice little volume, and we're going to move this over so you can get a good view of what's happening. The next two candlesticks, relatively low volume. But what comes next is a break over 267.79 and a vote of confidence in increased volume. Once we see that break, we get even more volume pouring in, and the bulls push all the way to the upside. So our trade is active, and we would be buying on the break of the 267.79. Our initial stop loss, if you're going to be playing this, would just be a new low, 265.92. What we want to do is allow the bulls to have some upside, give them a lot of room to play with this breakout, give the bears an opportunity to apply pressure to the downside. But if we're right, and the momentum from the daily chart is showing us upside continuation, we're not likely to hit a new low. We are, however, expecting consolidation, so we are going to be ready to scale out the moment our higher lows lose their consecutive candlestick higher lows. So sometimes we talk about higher lows like this, where we have individual trends hitting higher lows on each 5 minute higher low, 5 minute higher low, 2 minute higher low. What we're talking about in this case is the legitimate and actual lowest point of each candlestick. And if we push forward, we can see that each candlestick here following the breakout has a consecutive higher low. This is higher than this low is higher than this low. You get the idea. As soon as that pattern stops, we're going to be expecting consolidation. And that is something that you can apply on any time frame. If you have a 15-minute runner who is setting consecutive higher lows on each candlestick and you eventually lose that higher low, that's a good indication that you've got some consolidation underway. So here's our stop. We're already in. And our stop loss is going to be a manually triggered one at this point. Well, 267.92 is our stop loss. Our profit taking is going to be on the initial signs of consolidation because we do expect that. So we move forward, another 1 minute candlestick, another push to the upside, even more volume. And what we're looking for is just each candlestick to close. We're going to look for 269.72 to break. And I believe it's this candlestick that does it just by 2 pennies. 2 cents breaks, we kick in a consolidation, and then we move to the downside. So that is our easy trade out of the gate, 10 minutes into the day, and we've made ourselves a nice little bit of profit. At this point in the 1 minute time frame, we're expecting some sort of consolidation pattern. So far, this is nice and healthy. In fact, this is pretty positive. You could be trying to draw yourself a little bit of a bull flag. We have 2 areas of resistance. We can try to draw that in by connecting a couple of our green candlesticks. These guys work out pretty well. I think my cloning tool, there we go, it's working again. So we drag that down right here. This is pretty high and tight, and what we would look for would be a nice bull break outside of this pattern and price action to back us up. Unfortunately, we don't see that, but it is something that I'm watching for. What I am interested in, though, is can we hold over 267.79? That was yesterday's high-day resistance. It was a key level for us to get through. What the bulls want to do is be able to maintain their price action over that level. Now, is this a classic little bull flag? Probably not. I'm not so interested in it at this point. I need to see some healthier consolidation. There's still so much opportunity for the bulls and bears at this point, but we do get ourselves a little bit of chop inside this range. We established 268.01 as our nice little high. Okay, that's the real key takeaway at this point. Bulls break to the upside, and we end up building out a nice little channel. So I'm going to skip forward here a little bit. I'm not in a trade at this point. In fact, I didn't take any of these trades today. They were just absolutely beautiful calls inside the community. And I really wish I took the last one. We'll get to it, because when we see it, yeah, clear as day, absolutely beautiful. All right, so we're setting up for our third trade. We don't really have much on the table right now. We're just watching the bulls and bears fight it out, looking for some opportunity, looking for some healthy consolidation. I'm going to get rid of this chart over here because it kind of gives away the action a little bit. What we're looking for ultimately is to see if we are going to be setting higher highs without follow through, lower lows without follow through. Is there anything that's going to indicate that we got some sort of longer term consolidation pattern? And maybe, just maybe, we should consider switching out of our 1 minute time frame. I start the morning on the 1 minute time frame. I move to the 2 minute time frame, and I got the 2 and the 5, 15 and 60 pretty much up all the time for all of my charts. Now at this point, I can see that we had that little bear flag or bull flag, didn't really have any follow through. We seem to be developing an overall area of resistance. We can try to go in and draw something out like this. You know what? I'm pretty happy with that. It tends to fit the bill. What I'm looking for now is a break of 268.01. Anytime we start to see a trendline resistance, and if we're playing bullish, and we certainly are because the daily time frame is at our back, and we have a lot of bullish interest, very, very low volume, nice, healthy sideways consolidation. We're looking for a reason to play this to the upside. What we want to see is weak bears. I want bears to break 260.01. In fact, let's even break this 267.79 level and look for complete lack of follow through. And of course, we know that's what we got. We saw the bears come back down, just dip below, absolutely denied, and bulls push right back up. What does that give us? It gives us the last thing that we need to draw ourselves a beautiful little descending wedge. For wedges, we're only concerned really about this resistance line. This has proven itself many, many times for us. We can keep an eye on volume, but ultimately what we want to do is break this level, and our target for this break is going to be a rush pretty much to 269.86. We have a little bit of congestion here to take care of, but given our proximity to our support, given the weak attempt by the bears, I think we're on track to break 269.86, and we could even look for a high day as a target if we want to be really, really aggressive. Let's move that up right here. So I know that we happen to get ourselves a nice little test of our resistance point. We break bull. Look at the volume that spikes on that break. Bulls are waiting for the opportunity to break this trend line, and we see some significant follow through on that break. In fact, we go all the way up to our initial little resistance point, and we go back all the way up to near testing that high of day. Then we get to 270.52, I remember. Very close to it. So that is trade number 3. It is the consolidation, weak bear break of a key level, bullish follow through on a descending wedge with a very, very well-defined area of resistance for this trend line. Right into the area of our target. Absolutely beautiful. Even got ourselves a nice little 1 minute series of inside bars that the bull bear can follow through. Gorgeous. Now over the course of the rest of the midday, not a lot happens here on PayPal. We end up getting this little high. We have a little bit of a bull flag attempt. It doesn't really follow through. We have high day resistance. We start to fade to the downside. And in fact, we end up building like a nice little 2 minute channel. It doesn't really turn into anything too useful. We start to get these higher highs without much follow through. We get a base of resistance right at 269.87, 269.82. And then we just sort of move around here. We end up building out a pretty nice consolidation pattern in the form of inside bars. So what I'm going to do is show you what those look like now. Let's go back over here. So here we are on the 2 minute time frame. There's our initial trade, that quick daily resistance breakout. We get ourselves that little wedge into a wedge follow through. And now because we are trading sideways so much during the day, we end up building hourly inside bars. So what that means is there are blocks of time, an hour in length, wherein all the action fits inside the action of the previous range. So let's look at this range as an example. This could be an hourly inside bar. The range that follows fits inside this whole range. So it becomes an hourly inside bar over here. Again, those, just like on the daily time frame, are really, really useful for us because they show us a lot of intent. That is the nice part about these types of plays. So we have an hourly inside bar. We have a second hourly inside bar here. And we have a break of 269. Now, the reason we would not be interested in this bear break is because it goes against all of our bull thesis. Everything about PayPal today is showing us that it wants bullish upside. We've had a breakout on the daily time frame. We've had a beautiful descending wedge that has beautiful follow through. We had that bear break of the key level that didn't have any follow through, and now we've lost 269, but we're sort of just dawdling around here. We had a bull break attempt, didn't have any follow through. Now we got a 269 break, doesn't seem to have a lot of follow through. But what we do end up getting as a result of that action is an inside bar, a little bit of a reversal, which is exactly what we see here, a loss at that level and bulls showing up and pushing the price back up inside that range. And then finally, we end up getting a really nice inside bar here. Now, what is that level? 269.87. Let's go look at that again. We're going to move back up here because I think we just got a little bit ahead of ourselves. We come up, hit 269.87, and we pull back. Now, this is important because going back over here, we have 269.87 as an area of resistance again. We have reversed course from that bear break attempt. We've set up a second inside bar here, and as alluded to by our hourly chart, we know that we're going to break it. But the why and how we break it is really, really important. We've proven this area as a double top in the 2-minute time frame. We have ourselves an inside bar reversal. We have ourselves a 2-minute uptrend, and we have a clear area for us to try to break out of and continue the daily momentum to the upside. So this is our third trade potential. A bull break over 269.87. It is going to be a double top on the hourly time frame. It is a double top on the 2-minute time frame. It gives us a little miniature 2-minute bull flag and a 2-minute uptrend, and we got ourselves daily, weekly, monthly, quarterly momentum. Everyone has our back. Everybody is cheering for the bulls at this point. And finally, we get that little bit of a breakthrough. Oh, a triple top. We get that little breakthrough. Where is it? There you go. Big volume following that break. All eyes on 269.87. All the stop buys tripped. What is our target for this? Realistically, high a day. That would be my target. And what do? We blow it to smithereens. We just keep driving. 2-minute consolidation, knock that out. As soon as we break high a day, even more bull volume coming in, and an absolutely monstrous follow through for PayPal. It was just a sight to behold. I think that was a trade of the day. And here's a little bit of a blip on SPY. We saw that coming in. Where was that guy? 2-minute time frame. We're getting a little off track now, but there was a non-nonsense kind of sell-off here that didn't have any follow-through. But some of the names, PayPal included, did have a little bit of reaction to it. Luckily, shook it off, and we ended up closing the day very, very, very strong. So pretty cool combination of a few different approaches and a few different ways that we can utilize different strategies to make trades. So we had our initial breakout in the daily time frame. Stop loss would have been low of day. Ooh, I didn't talk about a stop loss for our descending wedge. Let's go back and draw what that would have looked like. Probably. So let's go see if we can recreate it. Hopefully we get it accurately as to how we would have built that thing. That's pretty critical to be able to rebuild all of your stuff at the same time. I would have been happy drawing it like that. So what we would be looking for a stop loss, again, we'd have to be pretty loose with this one. Descending wedges are hard to play your stop losses on because we can come back in a pattern and set a new lower low. But if I'm confident on a bull break like we had that little bit of volume, I would just set a stop loss right under 67.74 because we would have our bull break, we would have failed. And if we get all the way back down to that level, that's a pretty clear bearish intent, not being able to set any highs and certainly having no follow through on a bull break. So there's your stop losses. Again, your target would have been 270.61. And if you just walked up your 2-minute higher lows, you would have been stopped out at the loss of this little beauty right here, 269.92. Our last little trade, bull break over 269.86. My target would have been high a day to scale up. And realistically, I probably would have got stopped out back over here because I would have had my stop loss, a break even at that point. And those are the trades for PayPal today. Yeah, just a nice combination of using a few different strategies, a few different approaches, and reminding ourselves that there is a ton of opportunity here as long as we're willing to combine a few different types of elements, breakouts, patterns, inside bars, know what they all mean, know how one impacts the other, how these time frames work together, how to use reversals. There's a lot going on. That's why I absolutely love this stuff, and I love talking about it, and hopefully you like the video. If you have any questions, feel free to ask in the comments. That's it for today. Have a great one.